Have you ever wondered how much the average American actually saves? It's a question that may have crossed your mind. The answer, surprisingly, is not as much as you might think. In fact, a significant number of Americans are living paycheck to paycheck, with little to no savings to fall back on. The average American savings account balance, believe it or not, is a mere few $1,000s. This might sound like a lot, but when you consider the cost of living, unexpected expenses, and the average American debt, it's clear that this amount is woefully inadequate. When we look at the bigger picture, the statistics are even more startling. A large chunk of the population, around 60%, has less than $1,000 in savings. On the flip side, the average American debt is in the tens of thousands. It appears that a sizable portion of Americans are not saving enough, a concerning reality that we must confront. But what about inflation? How does it affect our savings? You may have heard the term inflation thrown around in economic discussions, but what does it really mean? In plain English, inflation is the rate at which the general level of prices for goods and services is rising. As inflation increases, every dollar you have buys a smaller percentage of a good or service. Let's imagine you've tucked away a crisp $100 bill under your mattress. If the inflation rate is 2%, by next year, your $100 will only have the purchasing power of $98. That's right, just by sitting there, your money has effectively lost value. Now 2% might not sound like much, but let's consider the long term. If you stash away $10,000 and forget about it for 20 years, with an average inflation rate of 2%, you'd lose almost half of that money's purchasing power. Your $10,000 would feel more like $5,600. Unfortunately, in recent years, we've seen inflation rates exceeding this 2%. The year 2023 saw an inflation rate of over 4%. That's double the average. This means your savings are losing value at an even faster pace. So, what does this all mean for your savings? Well, it's not great news. If you're solely relying on savings for your future, you're essentially losing money every year due to inflation. Your hard-earned cash is losing its purchasing power, bit by bit, year by year. And here's something scarier. If inflation rates continue to rise, the impact on our savings will be even more significant. It's like a silent thief quietly chipping away at your wealth. Inflation, as we can see, has a significant effect on our savings over time. It's crucial to understand this concept and, more importantly, to factor it into your financial planning. Because, as they say in the world of finance, cash is king, but only if it keeps its crown. The global pandemic has certainly shaken things up, hasn't it? This silent enemy, COVID-19, has had an enormous impact on our lives, and our financial health has not been spared. The pandemic has not only affected our physical health, but has also taken a toll on our financial well-being. Let's take a closer look at this. The pandemic led to unprecedented job losses across the nation. Millions of people found themselves without a steady income almost overnight. This sudden loss of income made it incredibly challenging for many Americans to continue saving money. After all, it's not easy to put away money for the future when you're worried about making ends meet today. But it wasn't just job losses that hit our savings. For those lucky enough to keep their jobs, many faced reduced hours or pay cuts, further straining their ability to save. Expenses, on the other hand, didn't show the same mercy. With the shift to remote work and online schooling, many families found their monthly bills increasing. Higher expenses for utilities, groceries, and internet service began to eat away at the already strained budgets. And then there were the unexpected costs. Many Americans found themselves facing medical bills or the need to invest in home office equipment. These sudden, unplanned expenses further depleted savings, leaving little to nothing behind for future needs. The result? The pandemic has left a significant dent in American savings. For many, the cushion they once had has been depleted or wiped out entirely. And for those who were already struggling to save, the pandemic has pushed them even further behind. It's clear that the pandemic has reshaped our financial landscape in ways we couldn't have imagined. The economic fallout from COVID-19 has highlighted just how important it is to have a financial safety net. But it has also shown us how quickly that safety net can disappear. COVID-19 has indeed dealt a severe blow to our savings habit. But remember, it's not the end of the story. Yes, the pandemic has made saving harder, but it's also highlighted the importance of having a plan to rebuild and protect our financial future. Let's dive into that in the next scene. Given these challenges, investing seems even more essential, doesn't it? Now let's take a moment to understand why investing is such an integral part of financial planning. Investing, in its simplest form, is about taking your money and putting it to work. It's about letting your dollars grow over time instead of letting them dwindle due to inflation and other economic factors. When you invest, you're not just stashing your money under the mattress. You're giving it the potential to grow, to multiply, and to secure your future. Think of it as planting a seed. With time, care, and a bit of luck, that seed grows into a tree, providing fruits for years to come. Investing comes in many forms, each with its own potential for return and risk. There are stocks, bonds, mutual funds, real estate, and more. Stocks, for example, give you a piece of ownership in a company. When the company does well, your investment can grow. Bonds, on the other hand, are essentially loans you give to a company or government. They pay you back with interest over a set period. Real estate, another popular investment avenue, gives you the opportunity to generate income through rentals or appreciate in value over time. Then there are mutual funds, which allow you to invest in a diversified portfolio of stocks, bonds, or other assets, managed by professionals. Each of these investment types has its own potential for returns and risks. The key is to diversify your investments, spreading your money across different assets to mitigate risks. This way, even if one investment doesn't perform well, others might, balancing out your overall returns. Investing is not about getting rich quick. It's about steadily building wealth over time. It's about creating a financial cushion that can help you weather economic storms, combat inflation, and ensure a more secure future. So, in the face of dwindling savings and rising inflation, investing serves as a crucial tool for financial growth and stability. Therefore, investing is not just a luxury, but a necessity for financial stability. Despite the importance of savings and investing, the savings rate is on a decline. Why is this happening? Well, there are a few key factors at play here. First, let's consider the increased cost of living. From rent to groceries, from healthcare to education, prices are soaring. Yet wages, for the most part, have remained stagnant. So while your dollar is stretched thinner and thinner, your paycheck isn't growing to match. Then, there's the culture of consumerism. We're bombarded daily with messages urging us to buy, buy, buy. From the latest smartphones to the trendiest fashion, it's all too easy to get swept up in the spending spree. And often, this leads to less money saved. And let's not forget about debt, credit cards, student loans, mortgages. They all take a significant chunk out of our earnings, leaving less to save. These factors combined have led to a decline in the American savings rate. So what have we learned about American savings today? We've discovered that the savings rate is on a downward trend, making the average American's financial security a bit shaky. Inflation, that sneaky thief, is continuously nibbling at our purchasing power, making our dollars worth less and less with each passing year. We've also delved into the impact of the COVID-19 pandemic, a historical event that has left the world grappling with unprecedented economic challenges. This crisis has further nudged the savings rate lower, leaving many Americans in a precarious financial situation. But it's not all doom and gloom. We've also discussed the importance of investing, a tool that can help combat the effects of inflation and increase your wealth over time. It's a ray of hope in a cloudy sky. Remember, it's never too late to start saving and investing. Your future self will thank you. So, let's get started on creating a secure financial future.